Hello, Paul. Good afternoon.
Good afternoon, Theo. How are you?
I'm very well. How are you?
Yeah, all the better for seeing you at the end of the week, Theo.
Nice. Uh, interesting week though so far. Four
Yeah, it
major
has been.
economies, they reported interest rates. Yeah, and it was
Yeah.
wow. We saw the dollar rallying like crazy, and yeah, some good opportunities arise.
Yeah, certainly for a sterling trader like me, there was I thought we would just see the acceleration of the sterling weakness, and
Yes,
that's what's
yes,
happened. So
yeah, yeah,
I was that played out
yeah.
really very nicely in the end.
And another technical analysis statement and true we can confirm is that supports they meant to be break for the trend to be continue, also resistance, so we don't need to rush to buy the
Yeah,
support. Yeah, so
yeah, yeah,
sort
yeah.
of
No,
validation, price action.
exactly what we've been talking about in this series. You know, there's it all played out. It was volatile, but it played out really nicely this week.
Absolutely. Paul, if you allow me for a sec, let me just share. Okay. I will reclaim the host back. I just want to share the screen to make sure everyone knows about the upcoming event we're going to have between me, you, and Jens, right?
Absolutely. Yep. That's up
And
next Wednesday.
yes, let me find the link. Why I don't find the link here? Maybe I'm on a different license. No, that's Market Talks. Okay, sorry, I can't find the link now. But yeah, next Wednesday, everyone stay tuned because it's going to be
Absolutely.
an hour and a half for myself, Paul, and Jens. We're going to discuss about many stuff that we don't need to go through now. So
Absolutely.
looking forward for everyone to join. Again, you guys register the same way you register to any other webinar from the same website, and nothing changes. It's going to just be 3 on the panels. Yeah, looking forward. So,
Yep.
Paul, I wish you the
Okay.
best luck. And
Thank you.
let me make you host on this one. Okay, you can share. Okay, awesome.
Yeah, that should be hopefully okay.
Hmm.
Splendid. Splendid. Hopefully everybody can hear me and hopefully everybody can see me. Thank you for the introduction, Theo. And yep, as Theo said, next Wednesday's session is going to be an extended session where myself, Jens, and Theo, we're going to have a little bit of a kind of a traders roundtable. It's the end of Q3. It's been an interesting couple of weeks as markets have got back into swing after the summer lull, and we'll be talking about what we're looking forward to in the final quarter of 2023. So be sure to join us for that. We're just going to be talking through a few instruments that we like and are of interest, and what we think might happen going forward. So that's next Wednesday. But here we are today, ladies and gentlemen, Friday afternoon, a little bit of a change up for what would be the next session in our overall price action trading guide. And today what we're going to talk about is I'm going to talk about understanding price action, but also where and how it can integrate perhaps with smart money concepts, SMC. So SMC is very popular at the moment for various reasons, which we'll touch on a little bit later. But what I want to be able to do is to show, well, actually, do they are they completely counterintuitive to each other? Do they completely sort of repel each other? Or are there ways that actually they can actually help and support and complement each other? And so we will touch upon a little bit of that as we go through our session today. Before I just dig into the next slide, it would be interesting to know. I see we've got a fabulous audience here from, as always. Okay, we've got great people here and a great bunch of people from all over the world. I appreciate these are the English-speaking webinars, but we have a truly global audience. So Trees is saying good morning from Mexico. It's great to have you here, Trees. You're very welcome. Roland says hello. You're all very welcome. It would be great to know, for all of you here, our global audience, what if any experience or knowledge do you have of SMC or smart money concepts? Maybe it's something that you already utilize in your trading. Maybe it's something you just never heard of before, okay? In which case, you'll hopefully learn a little bit here. Or maybe it's something that you understand or you've heard about, but you don't really understand and want a little bit of insight into how, if in any way, it could help you in your own present trading. So if you have experience of it, if you don't know, then by all means, just put it in the chat box. We'd really appreciate to hear what people's experience has been. So here we are, Admirals, Forex and CFD broker with a global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and providing you the opportunity to engage with markets on both the MT4 and MT5 platform. If you have any questions about Admirals, please get in touch with your account representative. So, as I said, we're going to talk about what we're going to talk about today on our agenda. As always, we talk about what's price action trading, but most importantly, in terms of our focus today, we'll talk about, well, what is SMC? What are smart money concepts? Why is it popular? And what are some of the concepts that we could take away and perhaps utilize in our own trading? And then, as always, if there's time, we'll have a little look at the live market. So Teresa says, I haven't used smart money as I do not know much about it. That's great. Appreciate that, Teresa. That's what these sessions are here for, just to give you just a little bit of insight, a little bit of help, just to, give a little bit of educational understanding so you're in a better place to make better choices going forward in your own trading journeys. So, for those who don't know me, my name's Paul. Traded for many years, traded for funds, traded for clients. Primarily, I like to focus on FX, indices, and commodities for my own trading. I tend to be a trend trader for the longer term trading, for swings and position trading. And I tend to be a mean reversion, a reversal trader for intraday and scalping, all of which plays a part in the overall price action series, but also in our today's commentary about the SMC concepts. And for those of you who are normally, used to seeing yens on a Friday afternoon and not really sure what this series is, this is all about a price action guide, and the whole idea being to help new traders establish a way to analyze and trade markets just using the basics of price action, all right? Because we realize that very often kind of new traders can perhaps be a little bit intimidated, maybe a little bit overwhelmed. There's so much data out there. But if you can have just a good understanding of price action, well, that will set you, that'll set you in a good place in terms of your trading journey. And that's what we like to sort of talk about as we go forward. So Rory says, yep, I trade ICT and smart money concepts. That's great to see you here, Rory. Okay, thanks for that. Raquel says, I've heard the term, but I have no idea about it. All right, so a bit of a mixed bag, and that's fine. That's what these sessions are here for. They're here to help people, give them a little bit of a understanding and help in their own trading journey. Oops. So we have covered an awful lot on our price action trading guide, and I said if you're new to it or not used to seeing yens on a Friday afternoon, what I've tried to do is cover overall the price action trading guide is a mixture of hard and soft skills. The hard skills, like the trade setups, which everybody loves, so engulfing candles, star formations, pin bars, etc. Everybody loves the hard skills, but equally a lot of the soft skills. So things like preparing for opportunity, managing risk. Building a trading plan, grading your trades, reviewing your trades, etc. The sort of soft skills that new traders sometimes don't realize why they are important, but I can assure you that the longer you trade, the more they do become important. That's all about putting the correct structures around you in order to give you the best opportunity to build a successful trading business. And so today we're going to talk about price action and smart money concepts. Just as a point, thanks for those of you who joined us for last week's session, which was all about price action questions. We had a little bit of an AMA with myself. That I really enjoyed that. That was really good, and we really enjoyed the interaction and lots of questions there from people. And probably what we'll do is maybe every couple of months we'll run something like that to give you an opportunity. Come and ask a trader coach your own particular trading questions to help you, as I said, help you progress in your own journey. So if you remember what I talk about as a simple price action trading guide, okay, what we've developed is this is like 10 very simple steps that will give you the opportunity to make sure you're doing the right thing, okay, to make sure you're doing the right things at the start of your trading journey. So remember what we talked about. Step one, whenever you open a chart, whether it be Bitcoin, gold, euro, dollar, doesn't matter. You define those levels of support and resistance monthly, weekly, daily. Get them on there, okay? Step two is we want to define, is there a trend in place? Remember, good trends leap off the chart. Yeah, you don't need to force them. If you're forcing it, it probably isn't there. And the idea we're looking for that is, well, if there is a trend, well, ideally what we're looking for is significant levels, all right? And waiting to see how does price react at significant levels in a trend, because if we have an uptrend, we want an opportunity to buy on a pullback, okay, at level, or if we're in a downtrend, we want an opportunity to sell a rally at a resistance level. So those, we're looking for those significant levels, which can be the levels of support resistance we've drawn in at step one. Might be big round numbers, okay, so like 2,000 on gold, was big earlier this year, or it might be dynamic support resistance, whereas we see price bouncing off particular moving averages. But what we're looking for is at those levels is step four is, are there any particular price action triggers at those key levels? So things like we've covered, pin bars, engulfing candles, key reversals, star formations, etc. But also be aware, is it part of a bigger chart pattern? Sometimes new traders, they get overly focused on that one little pin bar, but actually we need to be able to sort of step back and see, is it part of a bigger chart pattern? Something like maybe it's a flag pattern and an uptrend, or maybe we're looking actually as like we're riding into a double top or something like that. We want to be able to recognize the bigger picture. Then what we have is the sort of the back five, okay, which is always talk about the 5 R's, which is step 6 is risk, okay? You never trade without stop loss. You never risk more than a small portion of your account, of your capital on a trade. With risk, you accept it and you manage it accordingly. The flip side of that, step 7 is reward. Am I going to have a target for my trade, or am I going to use a trailing stop? The important thing is to know which one you're going to use before you actually engage with the trading. Step 8 is recording, all right? Keep great records of your trades. That's what we know always sort of going on about to all traders that I've worked with. Because if you're keeping good records of trades, well, then it allows you to step 9 to do a good review, all right? And by reviewing your trades, that's how you start to improve. That's how you start to identify the trends in your own trading, okay? And start to identify and understand which are the trade setups that resonate with you, which are the trades that are perhaps not your not your sweet spot. Because step 10 is about repeating, it's about consistency and discipline. It's about identifying which are the good trading setups and do more of them, and removing the sloppy, impulsive, off-plan trades that everybody will take because you're a human. But if you can cut down those mistakes, that helps you in just invariably making sure that your trajectory of your journey is pointing in the right direction. So as I said, very simple sort of 10 steps, okay, that will just keep new traders doing the right things. Rory said, is there a playlist on Admirals YouTube channel with all the videos in this series? He's not been able to locate one. There is, Rory, okay. You will find that there is the Admirals YouTube channel. And then if you look under that, under Trading Spotlight, you should see that all of those videos, okay, that we've created under the Paul's price action trading guide, they are all there, okay. So as here, certainly here in the northern hemisphere, as we draw towards winter, those long winter nights can be entertaining yourself as you watch through all of the price action trading guides that are on the Admirals YouTube channel. So do have a look on those. I can assure you that they are on there. Okay, so I always do the standard setup. I always go through the 10 steps because I think the more times traders hear it, the more it sort of sits with them and it embeds into their trading style the way we do. But today, what we want to talk about is, well, how can we understand price action and also smart money concepts, okay, SMC. So as I said, a couple of people here today have said, they understand it and they utilize it. And it would be great to know from the other people who are here, what your own experience has been. If you've used it, if you found it helpful, if it's been useful to you, or if, as I said, you've not even had experience or exposure to it. But in recent times, as the slide says, if you've spent any time exploring trading or looking at Forex or anything to do with trading on social media, you'll likely have encountered discussions and posts about SMC, smart money concepts in trading. And it's fair to say that, I think so at the moment, that these concepts, they are the kind of, let's call them the in fashion, okay? The trendy buzzwords and language and way of operating in markets, right? So today what I'm going to do is I'm going to provide just a very brief and very basic introduction to some of the main principles of SMC. We only have kind of, over about 40 odd minutes in time. So, I'm unable to cover everything. I'm unable to do it full justice today. But what I'm hoping to do is that just help you understand the overall concept, where it comes from, and one or two of the simple principles of it so that you can perhaps take away, have a look and see whether it's something that you'd like to incorporate into your own trading or whether it's something that actually works well with price action. And hopefully I'll be able to talk more about that. So, as I said, we're going to give a very, very brief introduction here, okay? I can't do it the full justice in the time we have, but it should be enough to just help you understand it. For people who, a couple like Raquel and Teresa said, they didn't really know it, didn't really understand it, didn't really utilize it. Hopefully, it'll just give you a little bit of an idea of some of the elements of it that you might be able to take away and have a look at in your own trading. And if it's something that you particularly enjoy, well then by all means let us know, and we'll try and do a few more sessions on it as well if it's helpful to you. So Eric says, tried using volume spread analysis, could see it in the rear view mirror. And that's, to be fair, Eric, that's an awful lot of concepts at the start of your trading journey. They look fantastic in hindsight. Okay, everybody's a great trader in hindsight because it's easy. We all have 20/20 hindsight. It is about finding something simple that you can utilize in the here and now. Okay, and that's why I talk about having that very simple price action 10 steps as a way. It means to just make sure you're doing the right thing all the time to put yourself in the right place, that when a simple trade setup appears for you, you're in a position to take it. I'm a great believer in less is more, but that's another story for another day. So what is SMC trading? What is smart money concept trading? And this, I might add, this is my understanding. This is my take. Okay, lots of people may disagree. Lots of people might agree. That's absolutely fine. That's what makes a market, after all. So many people would consider it as an alternative approach to price action trading. And you might look at it and say, well, actually, once you understand it and have a look at it, you might say, well, it employs some classic elements and principles like supply and demand, price patterns, and support and resistance, but perhaps presents them under new names, different guises, different descriptions. And whilst the terminology, my apologies, the terminology might seem unfamiliar, I mean, there is an awful lot of new jargon. You'll find personally that SMC is more akin to elements of traditional trading than it initially seems. So it's, as I said, an alternative approach to price action. Devotees of SMC and the individual, okay, the individual who is kind of responsible for it, a trader goes by the name of ICT, would say that it is it's a completely new way of operating and trading. My view would be that it is whilst there are new elements to it, it is closer to traditional trading than perhaps they would like to admit. And the gentleman who sort of created this, okay, and created that ICT, he's an individual that you can do your own due diligence on. He's what we would call in the UK, we would call him a Marmite. Okay, people either love him or they hate him. That's fine. That's trading. That's the way it generally tends to go anyway. But you can do your due diligence on the individual and what he's saying. That's, we're all adults. You can do your own research there. Really, today, all I'm interested in is, okay, are there elements of this trading that could benefit you as a trader in your journey? Are there elements here that you could take away and utilize in your trading? Are there pieces or maybe tactics that you could utilize to evolve your own particular trading? Ultimately, that's actually all I'm really interested in is, okay, does it work? Does it actually help you? Could it provide let's say, additional tactics, okay, additional concepts that you can, embody and take into your own trading style. Okay, I'm not here to pass commentary on the let's say the individuals involved. You are free to make your own judgment. Okay, all I'm interested in is, does this help me as a trader? That's all I care about. Does this help me as a trader? So let's have a little chat through some of the elements. So SMC states that market makers, such as institutions like banks and hedge funds, they are the smart money. And they are entities that operate to maneuver markets to make trading more challenging for retail traders. So the overall SMC approach is based on utilizing the actions and patterns of the so-called smart money to trade like the supposed smart money themselves. So they are hoping that they are operating more like the banks and hedge funds and the smart money, more so than how normal retail traders might engage with markets. And the idea is to emulate these trading patterns of these market makers, focusing on aspects like supply and demand and market structure. And as I said, you could go into it in a great deal more depth, but as I said, today is just a brief introduction, okay, for those people who have no idea about it. So it's a starting block, so to be. So traders who use smart money concepts, they will pay attention to those factors before making their trading decisions. And SMC traders believe that they strive to gain an edge in their trading by capitalizing on the moves of the smart money. So as it says there, they believe that they are operating like the smart money, the institutions, the banks, the hedge funds, etc. But really, they are still utilizing trading ideas, trading patterns that most traders would be aware of, even if they don't utilize them directly. Things like supply and demand and market structure. So, and as we go on to the charts, I'll give you a little bit of hint and idea how they particularly look at those, and actually how they look to utilize them in their own trading decisions. What I will say is that for completely new traders, sometimes the concepts and terminology of SMC, of smart money concepts, they can appear quite technical to someone who's completely new to their trading journey. So as I said, today's session, I'm just going to focus on clarifying some of the most basic elements of SMC, all right? And in particular, talk about, well, okay, how could I use that in my own price action trading? Are there elements there that I could utilize that would help me make me a better trader overall? And as I said, if you find it useful, then let us know. Okay, you can send feedback to the normal points, which I'll put the addresses up at the end. And if it helps, we can do a couple more sessions and go into a few more details on it if you find it particularly useful. So let's have a chat about some of the concepts and some of the terminology of SMC, okay, smart money concepts. So one of the first ones you'll hear them all talk about is liquidity, all right? So SMC traders' definition of liquidity are price points or levels where there are deemed to be lots of orders accumulating, in particular, stop loss orders, buy stops and sell stops. The reality is, when you look at a chart, liquidity can be found everywhere, but there are certain points of more interest than others. In particular, things like above old highs and below old lows. So SMC traders would claim that the price is always searching for the next draw on liquidity. It's always looking to move towards, okay, smart money is looking to move towards where these particular areas of liquidity are, these particular levels, these particular pools of liquidity. And hence, those areas, they become targets for many SMC's traders. They also become areas where they become interested and look to do their business, to look to particularly trade. So let's get the old drawing tool up here, all right? So liquidity. So this is just a euro dollar 15-minute chart. So remember what it's saying is that they are looking at liquidity as price points and levels where orders accumulate, in particular buy and sell stops. Okay, that's what they are thinking. And so things like things like above old highs, above old lows, those would be particular areas of interest. And in this case, what we had here from the kind of the previous days was a specific low there, kind of end of the day, starting into the overnight, the Asian session, and not unsurprisingly, okay, we can see that as we came into an area which is very often known as kind of, they would call it the London kill zone, but it's just the end of the Asian session into the start of the European session. We can see that actually prices move towards that area because they will believe that there's lots of orders there, lots of stop loss orders there. And what we can see is that actually price does reverse off that level, which is just a previous low. Okay, it's previous low. And where does price head towards? Well, price heads towards, okay, the most recent high, okay, the recent high, because they believe that is where liquidity is. Price works its way all the way up to there. And then what does it do? Once it's actually up there, it reverses off it. So they are, as I said, they're always looking for where the next draw on liquidity, and they would probably term this as what they would call external liquidity, okay, which is effectively, for the most part, old highs and old lows. And we have talked about this on the price action series about the importance of, certainly on an intraday basis, the kind of the relevance and the usefulness of being able to recognize previous days highs, previous days lows, because they are levels where orders will be sat, okay, where stop loss orders will be sat. And so it's not unusual to see price head towards there for various reasons. And it's a point where doing business as a trader, regardless of whether you're a price action trader, an SMC trader, a support and resistance trader, whatever, it's an area of interest, okay? It's an area of interest that we want to be able to look at to see, is this an area where I want to do my particular business? So when you hear SMC traders talking about liquidity, that's invariably what they are talking about, okay? Those kind of areas and levels where they believe that the majority of buy and stop orders will be sat, okay? And they make good targets for your trades if you're in one, and they also make good areas to identify beforehand, because you can want to see how does the market react at those particular levels. One of the other concepts and terminology you will hear them talk about is order blocks. Now, once again, this is, order blocks would be talked about by SMC traders, but you would find supply and demand traders will talk about order blocks as well. Quite a few different, let's say, variations on trading themes would have an idea of order blocks and would perhaps maybe have a different interpretation. But, generally what we are still looking at is it's SMC's traders' perspective of supply and demand. All right. So although many would state that order blocks are just, they're a more refined variation of a standard supply and demand concept. You'll quite often hear it. Sometimes they will be defined as areas of where there is a change in the state of delivery. That can just be areas where price is going to reverse. Okay, but it's a point where it's an area of interest where price might reverse. So if you like to trade reversals, which I do on an intraday basis, well then I'm going to be interested. That's an area where I'm going to be interested in what price action actually does. So when people talk about a bullish order block, is invariably it is what we'd see as the bearish close candle before the market moved up and broke structure, which we'll come on to in a particular moment. So what we're thinking about is it's the last bearish close. So in this particular case here, last bearish close before price moved up and also before price broke structure as well. Okay, once price breaks structure, that's what just confirms it, and we'll look at that in a couple more slides time. We'll look at that on a different side. And what we're realizing is that when price comes back to that area, it is likely to basically be bullish in terms of price is likely to come down and bounce off it on a bullish side. Not unsurprisingly, the flip side of that is a bearish order block, which can be the last bullish close candle before the market moved down and broke structure. So in that particular case, we can see price rallied its way up. Price actually dropped. This is the structure which I'm going to talk about in a moment. But this was the last real bullish close candle, okay, before we had that big drop. And not unsurprisingly, what we're interested in is actually what happens is price reversing when it comes back up to it. We'll look at that in a little bit more depth in a moment. I just want you to basically understand the very basic, simple concepts. So what you'll find is that SMC traders will often trade the return to the order block, right? So, they might want to trade from here, from this bullish order block up to this bearish order block, okay? That might be what they're looking to do, variations of what they're doing. But there are actually quite a few variations on those order blocks. And I'm just going to share with you just one or two of them. There are quite a good few, which you could look at. But this is, as I said, this is just a very simple, basic introduction today. In particular, one that you will hear talked about, and I, in my own thing, I have what I call a Vulcan setup, which is a variation of this from years ago. Okay, is that you'll hear them quite often talk about a breaker block. A breaker block is a failed order block, and the idea is this is where smart money enters the market to mitigate a potential loss, and when price returns to that failed order block is when traders will look to enter. Okay, so what does that actually mean, right? So here, this is, I think this is euro dollar 4-hour chart. What I'm interested in is we can see this is the low, this is the low price. Price broke these levels here. Okay, so they would be looking at, this would be down here, would be where we've broken through. This would be into a we're into liquidity. Okay, we've broken through, and this candle here, this bullish candle here, was the last bullish candle before this strong move down here, which broke structure, broke the recent lows. And so, people would be interested in that. Supply and demand traders would probably just say, well, actually, Paul, I just looked at that as an area of supply. But as a breaker block, you would look at that and you would sort of project it forward. And a breaker block, what we're interested in is, remember, it's a failed order block. So as prices reversed here and come back all the way, once we've seen it sort of trade and close, my definition would be trade and close through, okay, that particular order block. This is now a breaker block because it is a failed order block. And what you want to notice is, as price comes back into here, but price doesn't get any lower from there. This area now has gone from being from what we might have envisioned would be resistance. The resistance is broken and it now becomes support before price rallies its way up harder. And you can see actually even a couple of candles later, it comes back. That is now, it is a breaker block. Okay, it's changed. Okay, it's there's been a change in sentiment, a change in the way it moves, and so traders will quite often be very happy to see if they've identified the order block before a move. What they'll be looking for is a breaker block once that particular area of, whether you want to call it, in this case, supply, or that particular area of resistance, once that is broken, price comes back and retests it, well, that provides an opportunity to sort of take a trade in what would be likely be the new direction. So just, as an example, this is the monthly chart. Okay, that's what I was showing before. It's just a monthly chart, just to give an idea of, the kind of, although you'll find lots of SMC traders like to trade sort of 1-minute charts, 5-minute charts, etc. Good concepts work across all time frames. And as we looked at a little bit earlier, the euro dollar here, when I'm just looking at this chart, and I would be doing doing some of my own analysis. Well, here for me, as after price came down and then price had started to rally up. This is the structure it broke. Once it had, this was the last. For me, that's the last bearish full candle. Okay, before we rallied, that becomes a bullish order block. That's what I look for, and so I project that forward, and that's why I paint them green on my chart. So if we come back in this case years later, you can still remember, or it still reminds me that this is bullish. Okay, and on the flip side, okay, as price peaked, rolled over, this is the structure here. Okay, and once price broke that structure, well, then invariably, this was the last bullish closed candle before the drop, and not unsurprisingly, I can project that forward. And as I said, a couple of years later, when we actually come up and put in a very nice double top there before we sort of drift our way down here. But lots of other people's here. This candle here, okay, this would be the last bearish candle before we push to those new highs. We break in this high, push to new highs. That once price starts to come down and close beneath it, remember, that then starts to become a breaker block. Okay, that becomes a particular breaker block, and that's what that's what kind of SMC traders are looking for. They're looking to identify those those particular draws on liquidity. They're looking to identify those order blocks. They're looking to identify particular breaker blocks because they are areas where they are looking to particularly do their business. Yeah, and just another example on a kind of 4-hour breaker block. Now, what we're looking here is price had broken these particular lows, had broken these kind of this drawn liquidity down here, and then invariably what we saw was a reverse. This was the last bullish candle before we had that kind of real push down to the new lows, and what you can see is price trades back up into it, and then price actually closes. Price here, for me, it has to trade through and close it, and then what we see is actually when price comes back down to it, well, then what does it do? It prints, okay, it prints for me, that is, that's a bullish pin bar, which was an opportunity to basically take the trade in the new trend. So in that case, what you have is, you've got the breaker block of the SMC concept. But for me, this is that is a price action setup. That is just a simple, pin bar bouncing off a particular what has been resistance, which now becomes support, and that gives you the opportunity to sort of enter that particular new trend on the way down, on the way up. And what you start to be looking at as well, supply and demand traders would have been looking at this particular small red bearish candle, because that really is kind of it's the last bearish candle before we kind of push to these new particular highs. Okay, that's where we get this last thrust, and traders will be looking to see, well, if it breaks through here, does that then create a breaker block, which basically provides an opportunity to go short on the return to it. So there you go, just very quick examples. One of the other concepts and elements of terminology of SMC that you'll hear SMC traders talk a lot about, an awful lot about, is something called an FVG, a fair value gap they will talk about. But really what it is it's just describing an imbalance in the market, okay? It's describing a gap, and it is, for want of a better, it's almost like there is a vacuum in the market, all right? And what we know is that nature abhors a vacuum. Whenever there is a vacuum, a market will ultimately look to fill it. But what an FVG is it's a 3-candle combination, all right? And it's for when price leaves a level, leaves a particular area, and it only moves in one direction. Okay, only moves in one direction, and it can be used as an indication of the strength of a move. And this is something that you could take away and utilize straight away. Okay, just even if you look at it in terms of how you analyze this, because what we're seeing is it's a 3-candle combination. So in here we've got candle 1, candle 2, candle 3. But the important thing is that there is a gap. We can see that the low of this candle does not overlap the high of the 3rd candle. So this becomes a gap, okay? Price has just moved so fast, okay? Price has just moved with such strength that, there has not been even a pullback part. Price has just continued, in that case, on a bearish trajectory. And on the flip side, okay, like a bullish FVG would be a case of where we've seen price move away from an area, and we've got candle 1, candle 2, candle 3, and what we can see is that basically the high of this candle and the low of candle 3, there is no overlap at all. There is basically, price just was so strong, it just moved so fast. Okay, in that case, there was no, the buyers were fairly well and truly in control, and price basically has just rallied very, very strongly. And being able to start to identify these is what we become interested in, is actually, when we start to see what happens when price returns to these FVGs, okay? Returns to these imbalances in the market. What I would say is that an FVG should be relatively small, okay? If you see huge, large gaps like this, okay, that is, there's a different terminology, a different description for that. These are just basically what you should be seeing, occasionally around in particular, around turning points, right? And I'll talk a little bit more about that, okay? And as I said, some SMC traders will look to return to the fair value gap. So if you look here, most of these candles here, there is an overlap. All right, there is an overlap, okay, between the candle before and after. But if we just look here at this candle, that candle has, we've had a reversal there, okay? Whether you're a price action trader, SMC trader, okay, there has been there's a reversal there. There's a couple of bullish pin bars. But when that candle, completes, we see this candle moves very, very strongly. It also breaks the structure there, okay? And what we see is the low of the candle after it, okay, does not overlap with the candle before it. This area here, okay, that becomes our FVG, our bullish FVG. And although it doesn't completely close, what we can see is that price, when it comes down to it, it does bounce off it before it moves on. And so it's something you could take away, just even identifying FVGs, that can actually give you an idea that, there is a strong move in place. And in particular, you actually have another one there, as you can see, because that candle there does not overlap with that candle 1 does not overlap with that candle 3, does it? There's a gap there. So you've got gaps there, okay? And actually what we see is the price basically fills that first one, but comes down towards the second one before it basically, the bulls have stepped in again and pushed price much, much higher. And there are variations and understandings of that, but what you'll start to see is traders start to identify and utilize things with FVGs, with things like breaker blocks, also things like breakup structures, at draws or liquidities. You start to put these simple individual concepts together, you can start to build yourself a trading model, all right? A model that you can follow and flow with in your own particular trading style. And that kind of leads on to, what you'll see quite a few of them talk about is terms of, BOS, break of structure. And it's a key aspect of understanding all overall sort of the SMC trading target is to understand the break of structure. And a break of structure is where price surpasses the previous low in a downtrend and where price surpassed the previous high in an uptrend. So, here you can probably see that, that price is in a downtrend. That low there, okay, excuse my drawing. SMC traders would sort of basically consider that to be a break of structure, okay, because we're in a downtrend, okay, in a downtrend. When price reverses and breaks previous highs in a downtrend or previous lows in uptrend, well, then you'll quite often hear them talk to that as being a change of character, okay? So if you think about it here is the low here, if we think about, as the price has been moving down, well, where is the structure? Now, structure can be just a swing point, okay? Just be 3 candles, okay? So basically, there we go. Just excuse my drawing. As I say, I'm always a better trader than I am an artist. So, that would be seen as, there's an upswing there, okay? There's an upswing, there's a downswing, okay? 3 candles there. The third candle, should be effectively, well, the middle candle, second candle has to be lower than the candle before and the color after for a downswing, and for an upswing, the middle candle has to be higher than the candle before and the candle after it. And so we have that there, okay? That becomes basically that there is your change of character. And as we can see, as price trades through it, okay, not only did it provide us with that gap, okay, it broke through it. And then invariably what happened is price came back down in towards that area. And as I said, it's this area that I would be interested as a price action trader anyway, but also SMC traders would be, their reason for being interested in that kind of area would be for different reasons, but they would see that there has been basically a break of structure followed by, what was probably a draw on liquidity, followed by a reversal, which then broke structure, which is a change of character, and then price came back down in towards the FVGs. My view is it's not massively different, okay, from Dow theory, all right, lower lows, lower highs, higher lows, etc. It's just maybe a little bit of a different way of describing it, a little bit a way of it, of up of it. Because, so Rory says, yeah, the bomber didn't come back to the FVG because of the breaker block. Some PD arrays prevent others from being visited. Very good, very spot on there, Rory, okay, absolutely spot on. They would look at that as being the kind of that last bullish there being the kind of the one of the breaker blocks. Others might sort of call this one here, depending upon if you were looking at on the bigger picture. But yeah, nice touch, Rory, nice interpretation there. Boom. So what we want to understand is, is SMC a valid way of trading? Because the devotees of SMC, would say that, it is the only way to trade because they believe that it's focusing on copying the trading patterns of market makers such as banks and hedge funds. And that is what allows them to gain an edge in trading. My view, this is my view. In reality, SMC traders, they're not really trading like big banks or hedge funds, but what they are is merely interpreting an approach of how they believe big players might be trading. All right, it's how they believe big players might be trading. But ultimately, all right, it provides them with a framework that allows traders to analyze, interpret, and trade markets in a way that suits their own trading style, which I have to say, after many, many years, is not massively dissimilar to many other trading approaches. Yes, there are some individual elements that are very very useful. So things like breaker blocks, understanding break of structures, change of characters, understanding things like FVGs, okay, imbalances in markets. They are very useful little concepts, okay, that you can take away. But in many ways, you are still looking, okay, at very similar kind of trading approaches. And what I would say from years of trading myself, from years of working on trading floors, from years of coaching, right, probably hundreds, thousands of traders, is that the key to successful trading, it never really changes that much. Okay, what you really have to be doing is ensuring that you are managing risk, that you are managing yourself, okay, that you're trading from a good space, that you have a framework to be able to analyze markets, to identify what the possible bias is, or where the points of interest are, where the market may look to it has to make a decision, an inflection point, it has to make a change. And that what you're after is a series of simple tactics, or what SMC traders would call a model, that work well in the prevailing market conditions and provide an asymmetric reward to risk ratio. Okay, so if you're gonna risk 50, if you're gonna risk 50 pips, you want to be able to make 100 pips, 200 pips, etc. An asymmetric reward to risk. So what I would say is that SMC does have some really very, very useful concepts, okay, some really useful elements that can help price action traders or traders of any kind of, let's say, denomination, help them in terms of being able to give them confidence that their trade setup is where they want to be doing their business, but that ultimately the key to successful trading over all my years is still very much the same: management of risk, management of self, having a framework to be able to analyze markets, to identify what the possible bias is in terms of the direction or the trajectory, and having tactics that work well in those prevailing market conditions, and that give you asymmetric reward to risk. Okay, and that's what I'd be saying for all traders. Okay, regardless of whether you want to be supply and demand, price action, fundamentals, smart money concepts, whether you want to use the tides of the sea, okay, sunburst, which I know some traders have done in the past. In terms of successful trading, this is what I see time and time again as the keys to successful trading. So there you go. Thank you, Rory. That one slide is the greatest gem one can take away as a trader. Yeah, absolutely right. Okay, and thank you for that, Rory. Yeah, you're absolutely right. They really are. From years of it, that is what I see successful traders doing time and time again. So, in conclusion, SMC smart money concepts they're presently a very popular way of trading. Okay, you can't go on any social media platform without seeing elements of it. Some people might deem them a little bit controversial. That's probably because of ICT himself, the gentleman. He, as I said, he's a Marmite character. People either love him or they hate him. Ultimately, really, though, we're only just interested in, do these concepts help us as a trader? That's all we're really looking to do. Can they help guide me, help me evolve to my next level as a trader? It's very often seen as an alternative to price action trading. There is a lot of technical jargon, there are lots of new words, okay, for elements that are not massively different from other ways of trading. Okay? But SMC traders, they are interested in their interpretation of supply and demand and an understanding of the market structure and, okay, where the next draw on liquidity is. Their relationship is the way they create a framework in order to trade, what they would call their model. There are some very, very useful concepts to take away. However, you still need to be managing risk, managing yourself, be able to analyze a market and trade with discipline and consistency. And that's, those are the elements I've always been trying to preach to everybody since I've been doing these sessions. Okay, those are the elements you need to always look at it. So We are running over a little bit, but maybe I'll see if I can fit in 1 or 2 quick moments on the charts before we roll over. As I said at the start, okay, be sure to join us Wednesday, okay? Next Wednesday, 27th of September, we're going to have a traders Q3 roundtable, all right? So we'll just talk, me, Jens and Theo, we'll just talk about a few instruments that we've liked. We'll talk about some of our learning points. We'll also talk about, what we're going to be focusing on for the next few months ahead. So that is 2 o'clock London time, Wednesday, 27th of September. Make sure that you're signed up to join that. If you've got questions or comments or thoughts, okay, or feedback, by all means, you can do that. You can send them to the details there. As I said, all of these videos are on the Admirals YouTube channel, so be sure to youtube.com at Admirals Global. Go in there, look at, you can just put my name in, you'll be able to find all the price action elements there. So I am overrunning a little bit, but hey, I feel like being a bit of a rebel today. So bear with us a moment. We'll just quickly switch the charts just for a moment or two. Just have a little look at the charts, 1 or 2 areas that might be of interest, and see how that takes it. So just bear with me 1 moment as I switch across to the charts. Okay, so I'm hoping that you can. I'm hoping that you can sort of see my slide, or rather see my charts. Hear me, still see me. Okay. As I said, we're over a little bit, but I wanted to just show an area here. Okay, 1 or 2 little bits that I was interested in. Okay, good. Right. So euro dollar. So this is the euro dollar from yesterday. Now, admittedly, this is from the overnight Asian session, but I think this is it's a useful example of how I would look at as a breaker block. Okay, so what I'd be looking at here. Let's get the old drawing tool up here. Let's draw. Now, admittedly, this is not a this is where I'd be getting interested, because overnight what we had was, hopefully you can see, the euro against the US dollar, okay, was in a downtrend, and actually where we'd actually reached, okay, what was the previous week's low, previous week's low, okay, another sort of level of support, okay, what I would term as support, what SMC traders would probably look at as basically liquidity, okay, a pool of liquidity. Now, what I'm interested in is here, price makes a low, it pops up again, and then actually price makes a sort of, a final thrust through here. When price trades through that becomes a break of structure there, but then price reverses, doesn't it? Price reverses, and reverses quite strongly. And what we have here is, what you're looking at here is, as I said, just excuse my drawing, but I'm hoping what you can see is that basically price rallies its way up there quite strongly. How do I know it's quite strong? Well, because that candle there doesn't overlap with that candle. So I'm starting to build, there is an FVG there, okay, there, because those candles haven't overlapped. But interestingly, at the start of the European session, what happens is this candle here. I'm interested in this candle when it closes above the high of this. This is, not only is this, I would call this, that's a change of character, because that's the last high before the last push lower. It is also now become a breaker block, all right? When price has basically traded through it and closed the other side of it, that becomes a breaker block. And so what happens is we see price pops up a little bit, but notice when price comes back down to that area, notice how it turns into support. Notice how it turns into support before, for the next sort of 2 hours, excuse me, price rallies its way up. Price rallies its way and pushes its way up. And where does it push its way up to? Well, it pushes its way up to the high of the Asian session, okay? To the high of the Asian session, which traders would view that as, that is an area of liquidity there. It'll be the high of the Asian session. There will be, of course, there'll be stop orders there, and then price triggers and it kind of falls away, and other traders would be saying, well, Paul, that could be a breaker block there, which it basically slowly just trades before it comes back through it. It's making what I would be looking at as lower highs before it drops its way down. Where does it end? It ends at the previous week's low again, okay, liquidity, but also, if you notice, there was also a fair value gap there, okay, and price basically comes back, it fills it, and then it pops its way up there. So That's that's a chart that I trade off. We're using other ideas and concepts, but the SMC concepts, we're just looking at that yesterday morning. Okay, that's how it played there. Just very simple breaker structure, which then became a reversal at liquidity. Price came up, it popped through the put in a change of carrier, which was also became a breaker block. The bounce off that breaker block became the opportunity to basically to take a short-term trade up to the Asian highs, and then when price actually does come down again, it basically reverses once again at this kind of area of liquidity where there's an FVG before price drifts off again there. So there's kind of lots going on that. So Rory said he traded that from breaker block to current daily high Asia at the time, then traded again New York session. Fabulous, great trading, Rory. Okay, really solid trading. Well done. Give yourself a you can give yourself a pat on the back there. Okay, that was really good. That was really good trading there. I was kind of interested at the moment. Here we go. Looking at Euro Aussie here on this at the moment. Just looking at how we are doing that. Here we go. Just 1 second. How we're doing that there. Okay, at the moment, namely that price came down to yesterday's lows. All right, so you'll be looking at that as there's been a draw on liquidity. Price always moving towards where the most orders are hold up, and what we get is price comes down here and breaks the structure. Now, price action traders will be looking at that saying, well, actually, Paul, that's a key reversal. That's a bullish key reversal there. Okay, price is pushed to a new low, but closed above the high of the previous candle. That's my bullish. That's my bullish trade trigger. What we can see is this candle here. This would be the change of character, which we hadn't just before as I was going into the session. We hadn't broken it. Price came back down into that area here again. Okay, but what we can see now is it's traded through that kind of that area. And what we'd want to see is, well, could it actually get up, close above it, and then turn that last bullish candle before the last bearish push down? Could we turn that into a breaker block, in which case price comes up and bounces and moves up? That might be the reversal at the previous day's lows. All right, so they'd be looking at it as liquidity. I would just be looking at that's a reversal at yesterday's lows with with price action. Some might say that that's a version of an inverse head and shoulders. Some might say, well, Paul, that's actually a double bottom there. As I said, there are the concepts are, they might have different jargon, but actually what we're really looking at is we're looking at a reversal at a significant level, and that's what all traders are particularly looking to try and capture a piece of in their own particular style. So there we go. Bang. Okay, ladies and gentlemen, unfortunately we have run over there by a good bit, and I apologize for that. I'm always just trying to push in as much as I can get across to you. I appreciate that, as I said it right at the start, SMC is a big topic all of its own. I can't really do it justice in sort of 40 minutes, but hopefully if you're a completely new trader, maybe you'll start to understand some of those concepts, things like breaks of structure, change of character, things like draws on liquidity, things like order blocks, understanding breaker blocks, understanding FVGs. Take them away. Just start to have a look at them on the instruments you trade already at the moment. Just see what they look like. Have a little look at them, and then basically maybe one or two of those elements might actually be useful to add to your own particular trading style. As what I tend to find is that traders tend to they achieve a level of consistent, sustainable success for themselves when they meld together certain concepts that basically work for them, for their particular personality, their style, okay, their individual way of operating. So, as I said, appreciate we're trying to push as much as I could into a small portion, but hopefully there's lots to take away from it there. Remember, join us next Wednesday when I'll be here with Theo and Jens, and we'll talk about what we've learned this year, but also looking forward to what instruments are interesting to us for the remainder of 2023. Until that time, okay, ladies and gentlemen, I hope you have a great weekend. Hope you have a great trading week. Trade well as always, and I will speak to you soon. Trade well, everybody. Cheers.